Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I will be your host for about the next 20 minutes. We're going to have a short and sweet Options Guide TV going into the Thanksgiving Day holiday. If you have any questions, please feel free to put them in the chat box. We'll try to address them during the show. But this week is really about the last Magnificent Seven. Stock Nvidia. Nvidia announced earnings yesterday after the close. We looked at a Christmas tree, hence the seasonality of our strategies that we're doing here on Options Guide TV. So we looked at a Christmas tree butterfly. We modified it a little bit, and we did that based off of the earnings report. So when I look at NVIDIA and what has happened with them, I don't know if they should actually just be in a class by themselves. It should really just be a magnificent one in general, because they're blowing away the market as far as the earnings are concerned. No company's keeping pace with them. The stock got beaten up after their last earnings announcement, and then came all the way back to where it was right before earnings. So dropped all the way down around the 450 and below, came all the way back up to around the 500 level. They had an amazing beat as far as revenue is concerned, and just all the way across the board. And guess what? The stock has gotten beaten up. Today, we're seeing it down about 3%. And it's trading at 484.31 at this moment. But let's run to the chart and just take a quick peek at the chart, and then just talk a little bit about their earnings. So inside the TradeHawk software, we have a real interesting chart, especially this section. Once we got this huge gap up, then it's traded, it formed a nice head and shoulders here. Came down all the way down to look at the low level. The gap, where the gap started, was right around 360. Then right in this range, 395, 400. So the round numbers have been a big thing as far as this chart is concerned, and this company is concerned, because we saw actually going into this earnings announcement, and I'm just going to grab this little corner. We're going to zoom in on it now. But coming into this earnings announcement, we did see that run up. We actually came all the way up, and I grabbed it right on that high, didn't I? Almost to the penny, where the last high was in NVIDIA, the most recent high, I guess is the way that I would say that. And then going into the earnings, all of a sudden, boom, we are way down. We're at 484 now, down, way down 3%. A large number, but on a $500 stock, it's not that big on a percentage basis. But it's crazy to note that they beat revenue by over $2 billion on the estimate. So your estimate was off by $2 billion to the upside. That was a very solid beat, and the market took that opportunity to sell the news. Since we've had, once again, a very strong going up into this earnings, we had a very strong run up, all the way back down, a lot of choppiness going into this earnings, obviously parabolic run up. And now I should say the investors in general have taken the same path. Let's sell the news. A lot of people were concerned about what's going on with China and some sanctions that they were trying to implement, but this earnings report basically comes back and says, what sanctions? What are you talking about? So if China wasn't implementing sanctions, the numbers could even been better. So just blowing it away. I mean, I wonder if they would have beat the revenue estimates by, instead of just over 2 billion, maybe 4 billion. Does that mean we're down 6% on the stock? It's crazy. It was a very good quarter. It is the one magnificent that really is standing out of the Magnificent Seven. Over the past year, earnings are up 12-fold. So expect the stock to stay strong. We are long it inside our paper trading portfolio. And we did a Christmas tree butterfly saying that if we do break through this 500 level, and we did kind of mention, even though we do have a nice pattern here inside the chart, we did mention that this has been an area of resistance, and we bumped up against it once. We're doing it twice. Now, hopefully the third time's a charm. So if we trade back down into this range, down around the 470, 460 range, and can come back and actually bump up against that 500 level again. That it's really hard to keep a good company down 3 times in a row. So I definitely want to just even on a short-term basis, if we can get a solid breakout to the upside, if the stock does break through that 500 level, I would be very interested in doing a speculative trade in the short term to go along with our longer term trade that we have inside our paper trade portfolio. So, yeah, very interesting news on a holiday week when earnings are waning, earnings stories are waning. There's a lot of most of the companies have now announced earnings. We did have good retail numbers once again across the board with a lot of companies. The bulk of the companies that announced earnings, that are in the retail space, we're talking about Target, TJ Maxx, Home Depot, Lowe's. Most of them had solid reports, solid earnings, solid revenues. They were solid. They weren't blowing the market away, but they were less bad than anticipated, and just showing that the retail consumer once again is staying strong. But a lot of them gave some guidance saying that they're not anticipating the holiday market or the holiday sales, especially big ticket items, are waning a little bit. In particular, Home Depot said that. Well, and they got rewarded for saying that. And the stock had a very strong move to the upside in Home Depot, even though the guidance wasn't that great. So, what can you say? Very, very interesting week. We're going to have obviously Black Friday that's going to be happening this Friday. Also, it's going to Amazon, I'm sure, definitely planned this. They're going to be hosting on the Amazon web platform a NFL football game on Black Friday. It will be the first Black Friday NFL football game, and I don't think that is a coincidence by any means. So there will be interesting announcements that will come up around Amazon, and a lot of metrics will be taken, but they're going to have a boatload of people on their site doing the Black Friday holiday shopping, and they're going to be supporting the streaming of this live football game. So it'll be interesting to see how Amazon Web Services can perform. That big part of their company is the web that's bigger than the retail sales, and just see how the website does during a time where they're going to have a massive amount of people inside their network. Okay, so what did we do? Our trade was a Christmas tree butterfly. We wanted to get long if we broke out above the 500 level. We wanted to have limited and known risk on the downside. And so what we did was buy, as far as the Christmas tree butterfly is concerned, you have a wider long spread as that part of the butterfly, and a less wide short spread. But we're going to sell 2 short spreads to try to pay for the long spread as much as possible. We added some additional risk to the trade, but here's how the trade played out. We're obviously down, and the expected move, it didn't, I think we were looking at about an 8% expected move. We're only down about 3% at this point in time. But if we look at the spread, we're buying the 530. We sold 3 of the 545s and we bought 2 of the 555s. Now, important when you're setting up a Christmas tree butterfly is that the long legs add up to the short legs. So 1 plus 2 equals 3. That means that we do not have any open, naked, short contracts. So it's limited risk, but it did have additional risk. The risk would have been if we did break up above the 555 level. We did this entire trade for a net debit of, I think it was 25 cents. Yep, 25 cents to the account. So it cost us a quarter because of the way that we set it up. We did add some risk to get the cost of the overall trade down. We wanted to do it for net credit. We just weren't able to pull it off. But with that said, if we look at these option prices, there's really not much left to it. With the stock down, with the expiration dates coming. So right now you could close it out for 0. You might as well just let it run. There is a chance that this could come back by considering the numbers that they had. There could be some people that could come in and do a little bit of trading. But with that said, Thursdays the markets are closed. Friday's a half day. So this is probably just going to expire worthless. And good thing that we managed our risk, right? The good thing that we came in and paid less for the Christmas tree butterfly than we would have to buy a call option outright to do a standard butterfly. This was a way that we minimized our risk on the, or minimized our total cost of the trade. We still had more risk than we would on a standard butterfly, but we managed the cost of our trade by doing a skip strike, or by doing a Christmas tree butterfly. All right, so let's look. I'm inside the paper trading app of TradeHawk. And one of the things that we were looking at doing going into earnings was actually selling an Nvidia call option, because we are long our 320 call. Even though the market is, even though the market's down today, that we still have a good solid gain right now. According to the paper trading app, we're up $4,240, or about 27 or 28%. I think I would like to sell a call against this position. We're going to go out above the 500 level, and I'm a little nervous to do it today, but we do have basically the holidays. Not really, I think I like to sell options after an earnings report around a holiday. So if you know, with a lot of these expiration on the Google option contracts, they all expire on this holiday weekend, week, I guess, of trading. Week would be a better way to say it. The 11 on 11/23, then also on Charles Schwab, we did the same thing. So next week, we're going to have to come in and sell a couple of call options on these long option positions. But today, why not? Let's just sell it. Let's get this little bit of homework that we have to do, or a little bit of work that we have to do inside our portfolio over with. Market is down today. I think we are going to sell the call option based off of where the market's at right now. Okay, so options grid, let's go back. Let's look at Nvidia. Let's clear this out, and we're going to go definitely above the 500 level. Once again, when we're doing the fig leaves, we do not want to be assigned. Our goal is to not be assigned. So we're going to sacrifice premium to go further out of the money. But we didn't pay as much as we would have if we bought the stock outright. So we're selling it against a deep in the money call position that is acting like a surrogate for the stock. And we're going to probably go out. In this case, we might even, let's look at where the 9-day option contract is at. We may have to go out to the 16-day, but let's look where the 9-day is at. Yeah, we're still getting a ton of money right there, even on the 9-day option. Implied vol is still up around 36%. Yesterday, this volatility was 90%. Yep. So yesterday, this was 90%. That's came all the way down to 35%. The December contract was trading at 64%. Now it's trading at 35%. So we're still getting decent implied volatility. we look at, this is that November 9th. Let's look at that. December 1. Okay, there we go. There's December 1st expiration. We'll look at a 1 standard deviation move, which is now putting that right around. Remember, inside the TradeHawk software, we highlight, we shade where the 1 standard deviation move would be, which is right around 510. We're getting a ton of premium, even going all the way up to the 530 level still. So let's sell the 530. Okay, so 530 is going to be our strike. We do not want to be assigned on this. So if we get anywhere close to the strike, we're going to roll the position to try to avoid the assignment. We're not going to let it get in the money on our short option contract. We can even do a preemptive roll, which might work in Nvidia's scenario, in that you're just a little scared of gap openings in this underlying. So if we get anywhere close, 525 or so, we might look to roll it. But right now, we're going to go for 9 days. We got the holiday weekend coming. A lot of people are going to be thinking about the holidays a little bit more than semiconductors. So let's sell this one. So this is going to be our official paper trade for this Wednesday. So let's click on the bid, and we're going to bring in a little bit more premium, 122 for this. See if it will show. Well, looks like we froze a little bit. 1 second here. Okay, and now I think we're back. So should have popped up at 122. So this is the paper trading app on the TradeHawk software. Let's hit the bid. 122. It's 3 cent wide. Let's just make this execution happen. See that we're not moving. 1 second. Okay. Selling it for 122. Okay, so we are selling one Nvidia 530 strike call with the expiration date of December 1st, which is 9 days away. We're going to hit the bid on this. Well, it's actually gone up a couple of cents, so let's move it a little bit, of 124, and boom, we're sending that order. And we're filled at 124. So we run over to our portfolio. We're going to take a peek at that, and it's showing our position. We have 9 days. 9 more days, we'll come back and look at this trade. We're going to have to come back and look at all these other positions that we have that are closing on the 24th. And I do see that this option contract is in the money. 137 on the Google trade. Now, notice the ITM is kind of highlighting that. So let's take this position and let's roll it. I could have swore that we put in a position. I don't know if it must not have executed the last time we were on Options Guy TV. Right now, we can buy this back at, Google is trading at 138.44, so we're just 1 point in the money. But we're not going to be on Friday. We're going to have a special education show. We won't be on. We won't be live. So let's roll this right now. Let's do a little bit of cleanup work. So we're going to be buying the close to 137. We should be able to roll this. Let's go out. This is a net credit of 90 cents. Let's try to go up in here. Let's go 140. That's a debit. Sell the open. Let's go up further in time. 108. Credit. Okay, so here's what we're going to look to do in Google. We sold the 137 call. Google right now is trading at 138.49. So we're around the strike price. Normally, yesterday when it would have hit the 137 level, we would have looked to do the roll. As long as you're within usually 1 or 2 points of the strike price, you're going to be okay. You get 4 or 5 points in the money. and it does depend on the underlying stock, obviously, and whatever volatility is, et cetera, et cetera. But we're within the time range. We have an expiration date on the 24th. We don't want to let it ride. We're going to roll up to the 140 strike. Maybe we can even do the one. Let's see if there's a 141. Let's see how much of a credit that might be. Okay, so we can get up to the 141. So instead of bringing in a 58-cent credit on the 140, we're going to put this in for a net credit of 15 cents here. See, the midpoint right now is at 15 cents, and it is 7 cents by that. Let's give it 10 cents in this instance, and boom, that order has been sent. And I'll make sure that that executes. It's at 8 cents, and it looks like we filled. Sell to close. Sold one. At a net credit of 10 cents to the day. For the day, I should say. 10 cents. Okay, so now we've rolled our position. So we look. So now we got to keep an eye on Google still. We got to want it right around 141. Once again, we don't want to be assigned. We're going to have to go out to the 15th of December to be able to do that. If we had rolled when it hit that strike price of 137, might have been able to cut a week off on this. We might have been able to come back and do that the previous expiration, which was the 8th. There's a possibility that that might have happened. But in this instance, we caught it in time. We rolled out. Got another live to our Google position will live to see another day. And let's go check, see if we have any questions. If you have any questions, please do put them in the chat box. And if not, well, this is going to be it for this holiday week of Options Guide TV. This Friday, we're going to continue our education series as we do with a lot of holidays. Market's going to be a half day on this Friday. We've talked about Delta. We've talked about Gamma. We're going to come back on Friday, and we're going to add Theta into the mix. And then we'll see you live this coming up Monday for the next edition of Options Guide TV. Hopefully, you have a very wonderful Thanksgiving, and we will see you on the flip side.